The Olympics are coming to Brisbane in 2032. So what's that going to do to Brisbane property?
Brisbane is in the middle of a structural shift. The type of housing that will come to each local government area and the way the population movement will change between now and 2032 needs to be considered. We're going to unpack this and more in today's episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison. And today there's been a lot of talk about 2032 Olympics. So today we're going to jump in and talk about the Olympics opportunity and the outlook and the future of Brisbane property.
It's a really big episode, actually. We've got a lot of data that we're going to be talking about, breaking down each local government area. People often talk about Brisbane, and yet Brisbane, when we look at the data, encapsulates a huge geographical location. The Brisbane City Council region is one part of Brisbane, but we've also got Ipswich and we've got Logan and Redlands and Moreton Bay, amongst others. These are the areas. We're going to break down each of these local government areas today. We're going to look at supply and demand metrics within each area to really understand what's happening and where and how that may change and how that may impact Brisbane in the lead up to the 2032 Olympic Games. So lots of value in this episode. We hope you enjoy.
And also just for our listeners, as a little bit of a freebie, if you want to see, Melinda actually did a complete webinar on this. It's actually on our YouTube page as well. So Melinda actually did a complete webinar with Mike Mortlock from MCG Quantity Surveyors. So if you do want to jump over and have a longer look at some of the discussions, they can jump over and have a look at that as well.
And of course, that will include all of the graphs that we're going to be talking to in the podcast episode today, because there's some fantastic visuals. Alternatively, if you prefer to read a summary, head to the Streamline Property Buyers website. That's streamlineproperty.com.au. Click on the blog link and you will see the blog post on this exact topic: Olympics opportunity and outlook, the future of Brisbane property.
Now, on that blog, that's actually got the link to the YouTube. Is that
It does. That's correct. Yes.
So if you do go to that, to Streamline our website, and as Melinda said, go to the blog, you'll see there's a link. You can click on the link. That'll take you to the YouTube. You can watch the whole webinar with, as Melinda said, a lot more detail, obviously, than what we can actually hand out here on a podcast as well.
Yeah, so I think one of the biggest questions on a lot of people's minds is, how much further can Brisbane grow? We've obviously had one of the strongest capital growth performances in the last 5 years when we look nationally. It has been a standout performer in terms of capital city markets. There's no doubt whatsoever about that. But is the market actually peaking, or does it still have fuel in the tank? And I think this is one of the big questions that we need to ask ourselves. And so this is why we're going to be breaking down the Brisbane market today into all of those little segments. Brisbane continues to capture both national and international attention. Now that we are a city on the map, we are hosting the Olympic Games. We are one of Australia's most dynamic property markets as well. So what we want to do is unpack, well, what are the drivers of capital growth and how will our city change in the lead up to the Olympic event? And, what is that likely, or what impact is that likely to have on property buyers long term?
I think one of the big things, Brisbane is very different as well, which we know. But some of the market, the fundamentals from the market side of thing, and why Brisbane is so different as well.
Yeah, look, Brisbane is a river city, and a lot of people think that you must buy close into the CBD to be buying a capital growth asset in Brisbane. Obviously, there's a lot of flooding in Brisbane. We have to understand that elevation and height is quite desirable in Brisbane because of that flood impact. And we've seen just flood maps updated recently as well. So more and more homes are now being captured by flood maps, and that has implications for insurance, as we discussed recently on an episode where we were highlighting this issue. But the reality is right now in Brisbane, if we can focus first of all on the supply side dynamics, supply is tight. And when we talk about supply, that is the number of properties that are available to live in or to rent. So right now there's short-term supply that's measured in listing volumes or vacancy rates, and then there's long-term supply listed in building approvals and building commencements and things like that. So in July, if we're just looking at Brisbane as a whole, total listing volumes are down to about $15,600. This is July data, as I've mentioned, but half of the long-term that's half of the long-term average listing volume. So typically in Brisbane, listing volumes sit around 28,000 to 32,000. But as I said, more recently that's dropped to between 15 and 17,000 listings in a single month. So, we're almost not quite half of the number of properties that are available for sale at a time where there is elevated demand in the market.
That's incredible, and I think it's even more noticeable when you see these graphs that you put up as well, Melinda. The drop from that 32 to 28,000 to just over 15,000 in July.
Yeah, and I think that if people are looking at what's happening in Sydney, in Melbourne, in other parts of Australia, it's not the same trend. Brisbane is following a similar trend to Adelaide and Perth, but some of the other major capital city markets have listing volumes that are more in line with long-term trends. And this is one of the reasons that Brisbane has seen that consistent and sustained capital growth. We simply haven't had enough properties become available for sale to appease the number of buyers in the market. So there's been high levels of competition, and obviously competition drives price. When demand exceeds supply, prices increase, and that's what we've been experiencing here in the Brisbane market since COVID. In fact, it hasn't really slowed down, but for a few short months as interest rates started to increase.
Now, that was total listings, wasn't it?
That's right.
So new listings, and in particular, are really low.
Yeah.
And we saw 6,700 in July.
Yeah, again, the number of new listings coming to the market is really constrained in Brisbane. So we're seeing new listings compress. We're seeing old listings compressed. That's homes that may have been on the market for a long period of time. It's across the board, and that's why the total volume of listings available is really dismal, and it's really tight. And buyers are certainly finding that a big frustration in the Brisbane market at the moment.
Add to that construction activity.
Look, there's a lot of rising costs in construction. Obviously, we've seen construction prices increase significantly off the back of COVID, and this is creating more supply pressures. So what I will say is that the new housing supply across Queensland is not keeping pace with government targets. So nationally, we're already tens of thousands of dwellings short of federal targets, but here in Queensland, completions are nearly 30% behind schedule. So that's a huge shortfall compared to where we hoped we would be. And again, the fewer properties that we're delivering, it's going to put that pressure on supply and demand. If we don't have the supply coming through at a time where demand is heightened, prices will continue to escalate. Now, this is also compounded by escalating costs. When we talk about the cost to bring properties or new dwellings to the market, the average price of a greenfield house and land package in Brisbane has absolutely surged in recent years. And if I'm just to give some numbers, in the year 2020, the average price of a greenfield house and land package was around $500,000. By 2023, that had escalated to $830,000. So that's a huge increase in such a short period of time. And this is for brand new construction. So these are in those greenfield locations, new house and land packages. I'll also say that statutory taxes have also escalated rapidly, as well as regulatory costs and infrastructure charges. So these are local governments charging for infrastructure delivery for projects or new builds. And this is consistent across all dwelling types. So if we look in Brisbane, for example, there's more pressure on rising prices due to some of these government-enforced costs coming through. So if we look, for example, at Brisbane, we've got a 106% increase in infrastructure charges for greenfield houses, and that's just between 2019 and 2025. When we look at attached dwellings, that is units and townhouses, we've seen a 68% increase in these government charges for these types of projects. Now, of course, that has to be passed on to the consumer, the end buyer, and that's why we're seeing, even in the new dwelling space, an escalation in the end price that consumers are paying.
And then there's the demand side, and which we talk about. I mean, obviously our supply is really, really low, but if you look at the demand, your population growth in southeast Queensland is still very, very strong, within interstate migration coming from New South Wales and Victoria. And that's obviously boosting that demand side of things.
Look, it is. I would love to just backtrack a little bit before we get into the demand drivers, actually, because what I'd like to be able to do, I promised at the beginning, I'm going to break down each local government area in terms of the current supply, but also the future supply, because I think this is important for people to understand before we start talking about where's this demand coming from and what's happening in demand. What I will say is that historically, Brisbane has been a city of detached homes, that's single dwelling homes, big backyard, hills hoist in the backyard, etc. So large blocks and large homes. So I will say this is shifting, and it has been shifting for many years, but it's not shifting in all local government areas. So between 2021 and 2046, so this is a future projection, detached housing as a share of supply is forecast to shrink from 69% to 58%. So these are projections based on Shaping Southeast Queensland, which is a state government infrastructure and planning scheme that was put out in 2023. So in terms of total dwelling stock, we will see detached houses decrease from 69% of total stock down to 58%. That will be replaced by a lot of low-rise attached types of housing. So that low-rise attached housing will increase from 22% of housing supply to 25% of housing supply. We'll see some medium-rise attached 4 to 6% change between 2021 and 2046. But where we'll see more supply come through is in that high-rise attached. And we've already started to see that in the last 10 years in some inner city locations. So previously, between 2021, where we saw 5% of housing being that high-rise attached housing style, that will be changed to about 11% of housing by 2046. So that's actually going to shift the way we live in some particular pockets of the city as well. So medium density and high-rise dwellings will actually change, and that's going to be at the compromise of those detached housing. And that's simply because land is scarce. We can't continue to build out, so we must start building up. So I'm going to go into some local government insights, if that's okay.
Sure.
Just understanding where new dwellings will be delivered across Greater Brisbane, because I think this is actually critical for buyers and property investors as a whole. So let's start with Brisbane LGA, the Brisbane local government area. So between 2021 and 2046, we will see a decline in detached dwellings in the Brisbane local government area from 60% to 46%. So that's to be expected because we simply don't have more land, and we know that the only opportunity to create more dwellings in the Brisbane LGA is through higher density development. Low-rise attached dwellings will increase from 25% of housing supply to 29%, so think of townhouse type product. Medium rise attached will increase from 7% to 11%, and importantly, high rise attached will increase from 8% to 14%. Now, what is interesting here is that there will be a decline in detached, but an increase in the attached dwelling types in the Brisbane LGA, which I don't think that's a surprise.
No.
To anyone. There's only small remaining greenfield pockets of land in the Brisbane LGA anyway, so it's very hard to create new greenfield house and land packages. So a lot of that land also is flood impacted. You know, when you look at aerial photography, you might say, well, here's some land and here's some land, but if it is flood impacted, it's not going to be suitable for low density housing anyway. Let's go into Ipswich.
Yeah, I was going to say just on that, that is interesting because Brisbane City Council, I believe there's the zoning changes are coming out soon as well. They're rezoning Brisbane as well.
Yes, so the Lord Mayor just recently announced proposed changes in 3 specific areas where we're going to see higher density land be rezoned. That is in Indooroopilly, around the Indooroopilly Shopping Centre, also in Carindale, around the Carindale Westfield there, and also in Nunda on the north side of Brisbane. So when we see land rezoned for higher density, typically it's a few years before that higher density product is built, but it is important for people to understand that this is happening because it will create more supply of these high density units, which we've just been through. It is one of the areas of growth in the Brisbane local government area.
Yep. Sorry, so if you want to jump onto Ipswich.
So Ipswich, obviously, we're talking a different local government area now. There's significant greenfield capacity in Ipswich, and therefore it's quite a hub for detached housing. So there's more affordability. So land per square metre is cheaper compared to a lot of inner Brisbane or Brisbane LGA locations, so it does remain attractive for that reasons. But the issue with the Ipswich LGA is infrastructure and commute times, especially to the employment hubs, and they're going to be some key considerations in that area in the future. But looking at the proposed change in dwelling types between 2021 and 2046, detached dwellings will only change slightly from 88% to 78% over the next or over that period of time. Low-rise attached will increase from 12% to 20%. Medium-rise attached, really no change, and no high-rise coming in those areas whatsoever. So really, when we're looking at where is new dwelling growth coming from in the Ipswich region, it's all going to be predominantly 69% is going to be from detached housing. So there's going to be more detached housing built in this area because it does have the land that's available to do it, and only 27% then coming through as low-rise attached. That's like your townhouse type product.
Yeah, very different area, because as you say, that there's green space out there. They can start to do new estates, and they can start to do those house and land sort of packages as well.
And if we compare that, so as I mentioned, 69% of new dwelling growth in Ipswich coming from single house and land estates, whereas in the Brisbane LGA, only 11% of total dwelling supply will be coming from single lot housing. So really, really different in terms of the projected growth there. Looking at Logan, I think that, again, there's been some strong population growth amongst or within the Logan LGA recently, and there's also a lot of diverse supply. That means land is still available in this region as well. So there's definitely a lot of greenfield estates that are still achievable, and also townhouse developments also will play a role in this region. So for detached housing, we're going to see a small change there from 84% to 82%. Low-rise attached, that will increase only slightly from 15 to 16%. Not a lot of change in that medium-rise attached or high-rise attached either. And when we project forward in terms of new dwelling growth between 2021 and 2046, 79% of new dwellings in Logan will be single-lot homes on their own block, and 18% will be low-rise attached homes, with very, very small numbers being medium or high-rise attached. So Ipswich and Logan do share some similarities in that the major source of new dwelling supplies up until 2046 will be in detached housing.
And also then they also are very similar in the distance roughly from the CBD as well.
Yep.
Location-wise, they're a bit further out. So another one, Moreton Bay.
Yeah, look, Moreton Bay is one of the most active growth corridors in the Brisbane region as a whole. It has benefited a lot from infrastructure upgrades recently. We've seen the train line run through from Petrie all the way through to Redcliffe. That's been a bit of a game changer to open up some of those regions. Interestingly, whilst there's some greenfield supply still available in Moreton Bay, we're seeing a lot more infill development in this council region compared to the likes of Ipswich and Logan. Detached dwellings, that will decline from 80% of new supply to 66% between 2021 and 2046, but a big, big spike in low-rise attached, that's your townhouse type product, that will increase from 18% to 30% of the supply pipeline in this region, and very little again in terms of medium-rise or high-rise dwellings in the Moreton Bay Council. New dwelling growth predominantly in this region is going to come from the low-rise attached housing sector, followed closely, so 49% of new supply low-rise attached, followed closely by the detached single-lot housing at 45%. So That's a really interesting breakdown because, there's definitely going to be more townhouse-style product being filtered through in Moreton Bay, whereas in Ipswich and Logan, it's still single-lot homes that are largely going to be built.
It's not a surprise. The numbers are a little bit of a surprise, but I'm not surprised. Moreton Bay have been quite proactive in the way that they've done this a while ago, years ago now, where they actually changed a lot of their zoning. I think they're probably close to updating their zoning as well, because they had already predicted what it's going to look like in the future, where their train line went, things like that, and they actually rezoned areas for exactly what you're talking about now. This sort of townhouses and detached dwellings as well, as opposed to house and land packages from that side of it. So I'm not surprised in that one. We've seen that space in the Moreton Bay area for a while now.
And we've seen a lot of those small lot homes being built out on the 200 and 300 square metre lots as well. So a really effective use of land.
So we're actually seeing that happen a bit in Moreton Bay now as well. If you go out into some of these areas where we've been active in, you will see some of the houses have gone and they're actually building already these types of dwellings in there as well. Townhouses.
Now, I'd also just like to touch on Redlands. So this sits between the Brisbane LGA and the coastline on the southern side of the Brisbane River. Growth is actually more constrained here simply by geography because of Moreton Bay and also other environmental overlays. But detached housing does remain the dominant new dwelling growth segment in this particular market as well. So 61% of new dwellings will come through from detached housing. But there's a fairly high portion that'll come through low-rise attached dwellings with 21%. And much more medium-rise attached dwellings in this market with 13% coming through. And potentially that's going to be those locations by the water where we'll see those medium-rise developments start to actually come into effect. So we'll see detached housing decrease from 83% of dwellings to 78%. Low-rise increase from 16 to 17%, and medium-rise increase from 1% of all dwellings through to 4% of all dwellings. So again, predominantly still a low-density detached housing local government area. And I think what is interesting here, and it's probably not a surprise, is that the Brisbane local government area will really be a story of infill development, low-rise, medium-rise and high-rise. And so any houses in this particular area, they're simply not building anymore. They will become more and more scarce over time, whereas other council regions, they are going to continue to build houses, a lot more of them, especially in Ipswich and Logan. They are going to be the two local government areas that dominate in terms of housing supply on single lot lands. And so we need to understand that from an investment fundamental perspective as well, and how that could shift prices one way or another, and just, prices are influenced by the balance between supply, what is coming, what is available, and the demand for those particular product types.
Interesting with that, Brisbane changing for the future, which is what we're talking about now, what it's going to look like and how it's going to grow. And I think it's going to grow upwards. It is growing out when you look at those other areas like Ipswich, Logans, etc., Moreton Bay a little bit, but even Moreton Bay is going up a bit, Brisbane going up. And the others probably spreading out, if you want to put it in simple terms that way. So, demand we touched on a little bit earlier.
Yeah, you mentioned demand and you mentioned population growth in southeast Queensland. It absolutely does remain very strong. Interstate migration, especially from New South Wales and Victoria, has been boosting demand now for a few years. But the local government area breakdowns do show differences in terms of who's moving where and why. So that's actually been an interesting trend. We do expect that the population growth, the movement of people, will vary by local government area. So Brisbane local government area is expected to grow by 462,000 residents. The Ipswich area is expected to grow by 246,000 residents. Logan is expected to grow by 316,000, Moreton Bay by 308,000, and Redlands by just 49,000. So the population movements of people will also impact the demand for property types in certain areas. Obviously, with the population growing the most in the Brisbane local government area. That is why we need to then overlay that with what is the housing stock availability, how do people like to live in this particular location, and what's likely to happen if we've got more demand, partly due to population movements into a location for a particular product type, compared to some other areas. For example, Redlands, with only 49,000 people projected to move into the location between now and the estimate 2046. How does that impact on the demand for those property types in that location? And that's obviously what a qualified property investment advisor should be able to digest or unpack for anyone that they're partnering with.
So that's going to put a bit of pressure then on the CBD, obviously, or Brisbane itself.
Yeah, absolutely.
Talk about that.
Yep.
For that demand, when we talked about supply being so low, but yet we've got the demand on there, and obviously the growth happening for Brisbane as well.
Yeah, and I think that it's just critical for suburb selection. If you're looking at a particular product type in a particular location, it's so important, even as a home buyer, to understand, well, what is this area going to look like in the future? Will I be impacted negatively by any future development? These are the big questions we all need to be asking, and these are the questions that a local area specialist can absolutely help people to understand. Whether you're a home buyer or an investor, these things do matter, and it's important to understand when you're investing hundreds of thousands or millions of dollars into property as an asset class, you want to know the answers to these questions.
Yeah, I know we touched at the very, very start on the Olympic side of it when we talked about the Olympics. Obviously, it's very, very, very different to, say, at Sydney Olympics, where I'll call it Homebush Bay because it was Homebush Bay when I grew up in New South Wales, and we used to go out to Homebush to play hockey. It's now Sydney Olympic Village, I think it's called now. Very different. So it's away from the CBD. It was actually built specifically for the Olympics.
Yep.
Built the stadiums, they've got the accommodation, they've pretty much got a little, it's a hub, its own estate basically out there now. It's a hub. Whereas Brisbane is going to be completely different to that. So most of ours are going to be concentrated within a 5 kilometre of the CBD. Yeah,
the big infrastructure stadiums are going to be very close to the CBD. It's an inner city Olympic Games. We've talked about this previously on our podcast. So yes, Victoria Park it's literally on the fringe of the CBD, and this is where the main stadium is being constructed, as well as the swimming stadiums. These areas are not fringe locations. They're not suburban locations. They're inner city locations. So the infrastructure that's being built around the Olympic Games venues, it's going to largely benefit the local government area of Brisbane itself, more so than other fringe locations. And I think this is important for people to understand. The infrastructure-driven demand is going to be in the inner city locations of Brisbane. Yeah.
Yeah, very different. And I mean, you could walk there, basically. You can walk from the city to Vic Park. Or if you've got e-bikes, that's so much easier when you can jump on an e-bike and just shoot in along the bikeway and straight into the city as well.
Yeah, if we talk about some other demand pressures, what else is driving demand more recently, especially here in Brisbane? Let's talk about some of that. We've talked about population growth. We've broken that down in terms of where this population of people are moving to between now and 2046. But I'd also just like to touch on stamp duty. So the cost of stamp duty for a typical house in Brisbane, it's so much more affordable based on our median value compared to a lot of other capital city markets around Australia. So with our median value, stamp duty is roughly $32,000 based on, a house value of $1,030,000 or so. Whereas in Sydney, with a median house price of just over $1.6 million, stamp duty is around $75,000 or in excess of $75,000. In Melbourne, on a $1,030,000 property, stamp duty is $56,000 or thereabouts. Even Adelaide, on a $1 million property, stamp duty is $48,000. These are big differences in the cost to transact, and potentially one of the reasons why Brisbane and in fact Queensland as a whole remains a market that investors are still attracted to, because the cost of doing business, the stamp duty cost, is lower compared to other locations around the country. And I think that's one of the reasons why we still have so much investment interest in our city.
That's actually really interesting numbers when you look at that. I mean, Sydney's over double.
It is, yeah.
And Melbourne's way higher. Everyone, most places are actually a lot higher. Brisbane's one of the lowest in the country.
And we talked in a recent podcast episode about the PIPA survey results from the most recent sentiment survey from 2025, and it showed that Brisbane is one of the locations behind Melbourne at the moment that investors are still really focused on and still buying within. I've got some other information from the Australian Property Investor magazine, who also put out an investment sentiment survey. And their results also showed that investors view Brisbane as one of the top growth markets nationwide. 35% of survey respondents there said that Brisbane or Queensland as a whole would be the best property investment market to buy into within the next 12 months. So still lots of demand coming from investors into the market from all across Australia, because of course a lot of investors are borderless now.
So affordability side then, I mean, we've talked about supply, we've talked about the demand, some changes and how obviously people are going to live and where they're going to live. I guess it comes down to, I mean, you talked about stamp duty then, that's a part of affordability.
It is.
I think that's a big thing when we look at the growth and how it's going to change as well.
Yeah, of course. And I think that one thing that we consistently talk about in this podcast is that Brisbane's not one property market. Brisbane has a number of different sub-markets, and every suburb itself is a small demographic group that we should be, focusing in on if we're going to be buying in that market. There's many assessments that we would do in-house to understand, is this suburb an affordable suburb for the local home buyer that is living in this particular location. A lot of locations across Greater Brisbane have been driven over recent years. The prices have been driven not by the locals but by interstate investors. Remember, if you're buying in an area that locals can no longer afford to buy in because the home buyer in that area has been priced out, that means they can no longer afford to pay what an interstate investor would pay. That is an at-risk market. And we've definitely seen some markets across Greater Brisbane shift in this way. The most recent census data that we have available was in 2021. The next census will be in 2026. And I'm very confident we're going to see some significant shifts, structural shifts in the proportion of owner-occupiers to investors in some markets around Greater Brisbane. And that is concerning, because ultimately we want to make sure that our market is sustainable, and we want to ensure that investors are not the ones driving values, but instead it's the local owner-occupiers that are driving the values. Because if owner-occupiers can no longer afford to buy in their own backyard, that's a concern. That's a structural shift. And, we need to be mindful of that as professionals in the property investment industry. So affordability, I think it's locally determined. There's a lot of suburbs in Brisbane, because we track this monthly. There's a lot of suburbs in Brisbane that are still affordable for the locals that live there. They're still paying less than 30% of household income towards mortgage or rent. But then in other locations, sadly, there's some areas where the affordability is extremely stretched, where locals are having to pay nearly 50% of take-home household income towards mortgage or rent. And that is mortgage stress or rental stress 101, and not something that we would be recommending. So understanding where you're buying is critical.
Yeah. And obviously infrastructure, all those types of things. I mean, there's so many things that are going to change in Brisbane. We've got the metro running, Cross River Rail.
Yep.
There's so many different infrastructure setups for that side of things, as well as you touched on, the stadiums
right. Yep.
as well, to accommodate all this, and accommodation for athletes, all those types of things. There'll be a lot of changes in how that will shape Brisbane as well, looking forward.
Yeah, and I think with that infrastructure being layered into the existing city fabric, if you like, that means infrastructure upgrades will directly boost some established residential housing markets. But I don't think the rising tide will continue to lift all ships. I think since COVID, we've seen a lot of markets, grow in value off the back of very low interest rates rates and affordable housing across the board, but it's no longer affordable across the board. We've got many pockets where housing is unaffordable. We can't continue to see value shifts in the same way across the board. So I think that the last 5 years has been a great story for everyone that's been in the market as a homeowner or an investor. But I think that the next, 5 to 10 years and long term, it will be a different market. So don't just assume you can buy anywhere and actually experience similar uplifts.
We do talk a lot about when we're purchasing investment properties in strategy. Can you just give some insight to our investors when they're looking at investment insights and things like that on Brisbane and the surrounding areas?
Look, I think that it's so important for people to understand what is it that they're trying to achieve personally, because not all areas are going to be as affordable for a property investor to hold right now. We've seen property prices escalate much faster than rents in a lot of inner and middle ring locations, with interest rates sitting in the high 5%, low 6% mark for retail rates. We are seeing most properties that people are buying are negatively geared. And for some investors, the rate of negative gearing and the cash flow position on the property is not comfortable for them. So we're starting to see now some mortgage brokers actually stipulate a minimum amount of rent that's required for property investors to access funding. And that obviously influences what type of asset we can consider and what the cash flows need to be for the investor. So I've said it before, I'll say it again, property investing is not a one-size-fits-all approach, and it's about understanding what it is that an investor needs, tailoring the approach and the strategy for that individual, and then using our analysis to give that property investor the very best opportunity to succeed, to create that long-term wealth that they're looking for.
Yeah, it's definitely not a blanket approach, and I think that means so much when it looks to investing into property as well.
Yes, definitely.
Look, I think it's been a pretty good summary of it all. As we mentioned at the start, if you go across to the Streamline property website, the blog, the YouTube, you can watch everything, look at the graphs. There's a lot of information on there as well, and you can have a look at that whole webinar that Melinda did with Mike Mortlock as well. So, thanks very much. As usual, I'll throw it over to Melinda to wrap it up again, and I will talk next week. Thanks very much. Take care. Bye for now.
We hope that's been an enjoyable episode once again on the Brisbane Property Podcast. As always, if you have enjoyed this content, please share with friends and or family. We would love for you to also leave us a review on your favourite podcast player. We hope you have a wonderful week, and we look forward to speaking with you again soon. Bye for now.